right? So this is the sixth episode of our classes, and this is where it gets advanced, right? This is where everything is going to have a little bit of change, but this is where you need to understand. Because one thing about my teaching is I don't just teach you, I don't lecture, I teach in the sense that I will tell you if you see this, you do this, if you don't do this, you do that. Learn it that way. When it doesn't work too well for you, meaning you don't understand it very well, it's okay for you to modify it in such a way that it works for you. That's how trading is. That's how we all got to this stage, right? So now today we are going to be talking about the doctor system. And the first thing we are going to be talking about is the basic doctor system. That is the basic idea of how I trade. Now, it's going to be interesting because I've already dropped videos for you guys to watch, and I've deleted them because right now I'm going to do a lot of modification and make it sharper and easier, right? So the basic doctor system, we are going to be using the entire ideas we've used before, and then we're going to be making something different. Now, there is a way. If you want to trade in the entire market, there are only two things you do. Look for direction and look for entry, right? So in the left-hand side of my screen right here is how you look for what? Direction, and in the right-hand side is how you what? Enter. And I've explained that before. Now, looking at my screen, all of you looking at it, on my screen, you see that this is a daily key level. This line right here is a daily key level. So I'm assuming that when the market trade into a daily key level, now there are different ways you can use the advanced technique to get your direction. One, if you are a swing trader, even an intraday trader, any type of trader, you can wait for the market to reject from a daily key level and wait for the market to give you a daily breakout. So what do we have? Daily rejected daily, daily broke out. What do we have again? This is a what for swing traders. It's okay for you to have a daily reject daily and a daily breakout. Makes a lot of sense, right? Now, secondly, we can have a daily reject daily and a 4-hour breakout, which is the normal one. You can see what I wrote, normative and conservative. That is the normal way and the conservative way of what? Getting your direction. Thirdly, we will have a daily reject daily and a 4-hour breakout, just like this. But this time around, this is a type 2 breakout. If you pay attention, this is a type 1 breakout, type 1 breakout, type 1 breakout. This one only is the type 2 breakout. Now it's time to explain the type 2 breakout. How does the type 2 breakout works? If you pay attention, I defined breakout for you guys in the previous class. I don't know the definition I gave. I just combine English to make it make sense. So maybe if they don't align with the one I want to talk now, I beg, don't blame me. I beg. It's not my fault. It's okay. So breakout is how I explain it. The most recent support or resistance created before the market rejected a key level. Once it is broken, that is what a breakout is. The most recent support, this is a support that was created before the market rejected need to be broken out. But this time around, this is the most recent support created before the market rejected. The market don't have to break this low for us to say we have a breakout. No. The market after the tap on the daily key level, the market created a new word, support, and the market went up, came down, and break it. Now, the break of this new support this time around is what we call type 2 breakout. And this also confirms bearish direction temporary. Meaning for us to have a permanent bearish direction, we still have to wait for the type 1 breakout below here. Then we'll say we are permanently what? Bearish. But as far as the market did not break below here, it's just a short-term sell. Meaning it's helping me to stop buying. Sometimes I used to have a POI here. I will not buy anymore. Why? Because I have a temporary bearish direction. Even if it holds, I don't care. I am not what? Buying. So this is what we call a type 2 breakout. We also use it to sell. Now, in this type 2 breakout, I want you guys to get something clear. Rather than you selling from here, you are not going to be paying attention to this high. From this high, this is where you're going to be you're looking for your POI from this high down to this low. So you're not worried about this other structure here, except in few cases, but it hardly comes there, right? And then finally, which is one of the best for intraday traders, scalpers, and aggressive traders, When you have a daily rejection, you switch 2 time frame lower and look for H1 breakout. Now, this entire way of getting your direction, you can do it the same on what? On the weekly time frame. So if this is a weekly key level, you can have a weekly breakout. Then here you can have a daily breakout, which is the normative and conservative. You can have a daily breakout type 2, and you can have a H4 breakout for aggressive and intraday. Makes a lot of sense. Why I always explain with the daily key level is I'm a pure intraday trader. You guys hardly see me use the weekly. I use it to understand overall direction. But me, I am an intraday trader. I hardly hold. It was just last week that you see me held German 40 for over 23 hours, over 24 hours, and I ended up making just 2%. And the market went to 8%. I was just disappointed in myself because I trailed my stop loss. So market took me out on breaking. So this is basically the swing, the normative, the temporary, and the aggressive. Now, I'll use this 1 hour to make the entire explanation, the aggressive and the intraday. Now, if you want to trade the basic doctor system, first thing, get your direction. Now, look at this note. You can get bias using any method, meaning you can use the shadow reject and a 1 hour breakout, which is the normative way. You can have a CRT and a 1 hour or H4 breakout. Anyhow, you can get your bias, just get your bias. Then the entry here can come. Now, listen, we'll go into the chart and I'll show you a lot of examples. Scenario 1, after direction. All these things I'm talking about, they come afterward, direction. They come afterwards, direction. Scenario 1. Scenario 1. If QM and Apex are not fresh, use the OCL. Now, before I even start this explanation, we use only 3 key levels to execute after a breakout. That is based on the doctor system. We use QM, Apex, and what? OCL. But the OCL here is a case of cases. We don't always use it. We use it in some scenarios. You understand? We use it in your words, some scenarios. Now, the first thing says, if QM and Apex are not fresh, use OCL. Now, what does this mean? Once you have a breakout here, we use only 3 key levels. And the first key level is what? QM. So I'll mark out the QM right here. The second key level is what? Apex. So I'll mark out the Apex right here. The third key level is what? OCL. OCL can come here or here, anywhere. Let's say the OCL came here. Very beautiful, right? Now, these are the key levels we use after this H1 breakout. Now, if the QM and the Apex are not fresh, use OCL, meaning if these 2 key levels have been used, then we use this OCL to execute. Now, this usually OCL comes on the 4-hour time frame. I will explain. Now, if QM and Apex are fresh, both of these two are fresh, then if QM and Apex are fresh, use QM. Then if QM is not fresh, use Apex, meaning if both of them are fresh, don't bother about the Apex, use the QM. And when the QM is not fresh, use the Apex. Now, scenario 3, if the QM and the Apex are fresh, don't worry about the OCL, meaning if the QM and the Apex are fresh, you don't have any business with the OCL, right? Now, having understood these things I just read out for you, put it at the back of your mind, and then you understand what I'm saying. Now, this 3 ideas are ideas that are simplifying advanced market structure and candlestick structure, and you would understand why. Now, if you tend to understand that the advanced market structure or the candlestick structure, we said if QM is not fresh, meaning the market has tapped on the QM, meaning what? If QM is not fresh, if QM is not fresh, use Apex, meaning the market has created liquidity. So the liquidity is always going to be there. But for you to make it more advanced and more professional, you can be checking out liquidity. There are different types of liquidity, single candle liquidity, blah, 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 engineered liquidity, which when we come to putting it all together, I'll be saying all those things and be making little more explanations on them. So now, having understood that, okay, if the QM is fresh, you can use the QM. If the QM is not fresh, use the Apex. If the QM and the Apex are not fresh, use what? The OCL right here. Very simple explanation. Now let's get into the chart. Very simple. You don't have to stress yourself. Get your direction. Do this simple thing. Now, what brought about the doctor system models is that when the market refused to pull back to any of this, what do? That's when you start playing our models. I'll show you guys a lot of examples and a trade we all missed on GBPUSD. Another thing also is when the market reach your target, always get out of the chart. Immediately the market reach your target or the market take out the external liquidity, fucking go. Because when the markets take out, for example, let's be sincere, this is an internal liquidity, right? Market created internal liquidity, right? Then market trail all the way down to take out the external liquidity, which was your target. Don't you know that this high can be the next internal liquidity that the market is going to target before selling? Once the market go to the target before you, get out. Even if the market come and respect the zone, me, I don't care. I'm gone because I've taken too much losses from that. So let's go into the chart and let's see. Now, this is GBPUSD, and let's go into the daily time frame. I think I would definitely have a lot of examples right here because I've done so many weird things. Now, on the Friday right here, on GBPUSD, we had a shadow reject. So when I saw the shadow reject happen, remember before the day end is where you're going to be looking for your entry. Now, once we have this shadow reject on the daily, we switch quickly into the 1 hour time frame. Now, remember your entries, even if they are coming from the 1 hour time frame, you always want them to align with the H4. If they are not, though, it's making it lower probability, but that doesn't mean it's not going to hold. Right here, we have the 1 hour shadow reject. After the 1 hour shadow reject, what do we look out for? Sorry, the daily shadow reject, a 1 hour breakout. Once we have a 1 hour breakout, we execute from the QM. Now, another thing, if you have a QM that is fresh, remember, it must be fresh on the 30 minutes too, if you're using the 1 hour. Same thing if the 4 hour, if you're using the 4 hour and the 4 hour QM is fresh or the apex is fresh, it must be fresh on the 1 hour. It must be. If it is not, then it is very useless. Now, this is the QM after the market close above. The market drop back into the QM. Now, let's go to the 30 minutes time frame. You need to make sure that this particular zone is fresh even on the what? On the 30 minutes time frame. So when you come into the 30 minutes time frame, this is what I'm talking about, right? This is what I'm talking about. Now, look at this structure here. Look at the QM. The QM is a very strong zone because what? It has history. It has history in the sense that the market tap on it multiple times before disrespecting it. Now, what is this? Imbalance. And what is this? Liquidity. So automatically, when you understand why I created the concept or why I understood the concept that if QM is fresh, use this, if this is this, use this, is that liquidity is always going to be there on its own. But it's going to be advisable that, okay, you should learn how to watch that liquidity, that if that liquidity is not present, then you can decide to, even if the QM is fresh, you can decide to use the apex. That's why I taught you liquidity in the previous place. Overlapping imbalance, liquidity, then QM. Then this is your point of execution. Buy, boom. And then you quickly take the buy. Now let's go into the 4 hour time frame still. This time around, we use what? We use the 1 hour time frame. Then let's go into the 4 hour time frame. Now let's look at the 4 hour time frame. Now, the 4 hour time frame, something happened here. And a lot of people took losses because the market gave us what? The 4 hour breakout. Now, after the 4 hour breakout, look, this is the next day. This is the next day. So we are going to be paying attention to all those QMs, this QM right here, and what? This QM right here. And then the apex have been used. We don't have any business with the apex, but this QM is fresh, this QM is fresh. So what do? We go into the 1 hour time frame and we're going to be looking for a refinement of that QM. Now, looking for a refinement of that QM is going to make us to use what? This particular zone right here on the H1 time frame. Now, and it makes sense. Why? I'm not going to be bothering about this right here. I'm going to be worried about using this QM right here, and then I'll be taking this as liquidity because liquidity is going to be there on its own, if you understand, right? Now, what did I do? A shadow reject was there, but this time around the H4 breakout. The first entry here was the H1 breakout. The second entry here was the H4 breakout. Then the market tapped, went all the way up, but the market still dropped a little bit, came a little bit deeper, and then entry came from here. And some people took losses. I don't know how they managed to take losses. Now, this is about stop loss placement, right? Whenever your entry is overlapping inside an imbalance, now the low of the week that has that imbalance should be your stop loss. This place should be your stop loss. Like I said, I don't do tight stop loss. Okay. But also, when you are refining from this side, you can refine down to the right hand side of your screen, meaning your refinement can come to this side because this line is here. So you can bring your refinement into this area. It depends on what you see. But then, I'm not going to make too much explanation on this class because we have models that are protecting everything. But this should have been a model 3 because you're going to be taking your entry now from around this area, and then you use this area to buy, making it more simpler. So, but at least even if you use the other side, since there's an imbalance, you're going to cover the low, then this is going to be your entry, and then you still continue the buy to the upside, right? What did you see again? Daily reject, daily H4 breakout, H4 QM was used to take the buy. First buy H1, second buy H4 refining to H1. liquidity is there and everything was there, right? Now let's still come trail into the chart and let's see more, right? Let's see more. Now, every day you wake up in the morning, you're trying to like do the same thing and see what the market is doing or what the market has given to you, right? Before you like take an entry. So I'll also use the German 40 there as an example so you guys can see the trade we took right there. The trade I took, nothing too much. Now the same thing always happen. The same thing always happen, right? Let's see, 1, 2, 3. I can't find where the rejection was coming from. I think this was it. Was it this? We have this rejection right here. Was it this? No, it was this. This is the rejection. So we have a daily reject daily right here. No, was it this? I don't know. We have a daily rejection, though, if I can remember. I've forgotten the day. Then let's go into the 4 hour time frame. Once we go into the 4 hour time frame, I will remember. Okay, now this is it. It was this one. So we have a daily reject daily. Can you see that? A daily reject daily. Then we have a 4 hour breakout. Now, immediately the 4 hour breakout, you are paying attention to QM and Apex. Which one is fresh? QM is fresh, Apex is fresh. Now let's mark out the QM here. Let's mark out the Apex. What do you do next? You're going to check the H1 if the H1 is fresh. Once the H1 is fresh, when you come into the H1, this is where the entry tagged us in. The H1 was here. It was not fresh, and the H1 was not making any sense, so we deleted the H1. Then we were looking at the H1 fresh Apex because QM is not fresh. Remember, scenario 1, put it at the back of your mind. If QM and Apex are not fresh, use the OCL. That is scenario 1. Scenario 2, if QM is fresh, use the QM. If QM is not fresh, use the Apex. Scenario 3, if QM and Apex are not fresh, sorry, don't bother about the OCL, right? So we have the H1 like this. Makes a lot of sense, right? So I decided to use it like this, and then it makes a lot of sense because mitigation of the QM. I always tell you guys this thing is automatic. If the QM is not fresh, meaning the market has mitigated the QM, meaning the liquidity is going to serve as liquidity for the Apex. That is what is brought about this thing. Then the entry came from this because the QM right there is not fresh. Very simple. Now let's go to USDJPY. There are a lot of examples. This is the basic idea. And this is the one I promised to give you guys. I told you guys based on my challenge that I'm going to give you guys something that if you use it, that your problem that you cannot pass, you pass it. That your problem that is giving you that headache, it will not give you that headache anymore. All right. So I think we have an idea right inside here. Remember this QM here that was tested? Market came into this QM. So what do we have right there? We have a daily reject daily. So we can use the 4 hour, we can use the 1 hour, depending on whatsoever thing we want to do, right? Depending on whatsoever thing we want to do. Now, I think I saw a trade inside there. I can't remember if the trade was very valid, but I'll check it. Okay. We don't have a very valid trade because we're looking for a 1 hour breakout. And it has to be a type 1 hour breakout. So for us to have a 1 hour breakout, you need to be above here. I remember I used an idea to take a trade inside here. Right? We're going to be talking about it sooner. But for you to have a proper 1 hour breakout, you want the market to break out above here. And that's why the market dropped all the way down because there was no 1 hour valid breakout. And you have been bearish all this while, right? You've been bearish all this while. So the same thing that happened on a Friday that led to the drop. Remember what I told you guys, that fundamental is going to be always driving the market. But for fundamental to play out, technically, something must happen. Technically, something must happen. So right here, we have a daily reject daily, and we have a H4 breakout that happened just below here, H1 breakout. Then all of us were looking for this QM, including me. But then the market disappointed us, did not come back to the entry, and then the market sold, right? But what is this one telling you? It's telling you that, okay, that your model is correct. That thing that I'm teaching you works. That is what this thing is telling you. There's no too much cho. The same thing on gold, the Friday buys. How did they also happen? The same thing, the same idea over and over again. Did I do anything? No. What happened? Market gave us a shadow reject, if you guys remember, on the daily time frame. Let's look at it together today. Let's look at it very well. Based on the basic idea of the doctor system, market gave us a shadow reject. Immediately there's a shadow reject. Me, I'm going to be looking forward. The opposing side. After the shadow reject, was the market rejecting from any key level? No. And I was cool with it because there was a shadow reject. It's a rejection on its own. We go into the H1 time frame, dropping down into the H1 time frame. What did the market do? We have something like this. Now, you have a H1 breakout. Just pay attention to this so you can learn something new. After the breakout right here, we are waiting for the QM and what? And the apex. Now, in this scenario, look at this apex. There is no wick, but behind it, there is a very long wick. And whenever you have a very long wick, I've always said it, and I'm saying it to you guys that there are a lot of key levels inside that long wick on the lower time frame that the market can pull back into. Anytime you have a long wick, make sure you box the long wick and then check it. What is inside the long wick on the lower time? Now, after the breakout, we are going to be looking at what QMs and apex and paying attention to this QM. I don't know whether it's even fresh because I did not even pay attention to it. Let's check. On the H1, it's fresh, so we'll check the 30 minutes time frame. On the 30 minutes time frame, is also very fresh. So some people would have taken their entry from here, place a proper stop loss so that the market is not going to take you out. But seeing that long week, I took advantage of the long week and then I took an entry based on the liquidity and the FVG. And I know that anytime there's an FVG, market is likely going to rebalance it. I make mention to you guys that the market does two things. It's either the market is going to take out liquidity or the market is going to rebalance at fair value gap. Then I use this zone. Now, this is a structure type 3, like I've already explained. Then I use this particular zone to take that particular buy. So anytime you are using a proper stop loss, this market is not going to take you out randomly. There's nothing you could do. For example, let's say you use the QM like I said, right? I'm not teaching you guys to use big or small stop loss, no. But now let's say you use this QM like this, use this QM, and then you refine into the 30 minutes. Let's be frank, refine into the 30 minutes. On the 30 minutes, you're going to be using this. Am I correct? Right, this is what you're going to be using. But if you pay attention, sorry to say, market has used this QM on the 30 minutes. The market closed above it, come back and use it. So that's why. So you're going to be paying attention to what? To the apex. Remember I said, if it's fresh on the 1 hour, it has to be fresh on the 30 minutes if you are using the daily H1 breakout. If it's fresh on the 4 hour, it has to be fresh on the 1 hour if you are using the other one. So this is mitigated. This is mitigated. So you're going to be paying attention to the H1 apex. And the H1 apex is a very little one. So you are going to be boxing this long wick behind it and look for an entry inside the wick. That is what I did. And that's why the buy was came from there. Target this high. This is exactly my target. And then boom. So this thing happened consistently. And then this is my assignment, and this is my first assignment. That your Professional account that is in drawdown, yeah? That your account that you have not been able to pass. Use the basic doctor system. Go into your chart. Use the basic idea of the doctor system. This particular idea. Execute it, even if it is once a week or twice a week. Do it for 2 months. Execute only the basic doctor system. This is the first step to the advanced thing I'm teaching. Execute only this in 2 months. And if you don't pass your program, even if you're going to fail one, you're going to pass one, then please just quit trading, because I don't think there is something that is going to work for you. Because this is the easiest thing you can find that works. Even if it fails 5 times in a row, one win, put a fixed RR, set a fixed rule. Tell yourself you are always trading 1:5 with this and see. Even if you are going to take 5 losses, losing 1%, you're going to win 2 in a row or 3 in a row, and you're up 10% ASAP. And moreover, it works far, far more than you think. Okay, it works more than you think. When I drop this video, go through it, 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 and keep going through it. Once you understand it, boom. Okay. Yeah. So now let's take a look at I saw a lot of trades, so we'll just go through them. Look at GBPJPY that happened within the week too. So we'll go through it and you see. Now, what happened on a Friday on GBPJPY? On the daily time frame, remember, on the daily time frame, the market traded up and rejected from this daily reject daily. So you can use the H4 breakout, you can use the H1 breakout. Your target is the next daily key level, which is right here. You now drop into the H4 time frame. You're looking for a breakout, because that's the one I always I check. If I can't find, I use the other one. Now this one, the H4 breakout. You can't find, I go into the H1. On the H1, the rejection happened. Look at the rejection right here. This is where the rejection happened. And where do you have the breakout? The breakout happened here. You are always looking for a type 1 breakout on the H1 time frame. Now, I always like boxing the QM like this. I box the QM. When I box the QM, I use it. I don't mark it out first. I go into the 30 minutes. Remember, if it's fresh on the H1, it has to be fresh on the what? 30 minutes. Then on the 30 minutes, I'll make it go up like this. Then I'll use this. And you'll be like, why? This is automatic. I repeat, the QM is fresh. The apex, I don't worry about the apex. Now, look at it. Market created liquidity and then pull back and then market tagged us in here. Once you know how to place your stop loss properly, you don't need a very tight stop loss. Like I said, you enter from here. This is your entry right there. Okay. Enter from here, place a proper stop loss. You can put like 12, which is the standard I use usually for this GBPJPY when I was trading it. Then you trade down to the next daily key level. What did you do? Basic doctor system. It played out on Friday. I'll be like, oh, I'm done for the day. The market takes you out. Oh, yeah, I'm done. No stress. Yeah, I'm done. You don't need to do anything too much, okay? Very simple idea. If the market keep missing your entry for 2 weeks, it's cool. It's cool. See, miss entries are cool. SLs are cool. Wins are cool. Just understand what you are signing up for. Not taking a trade for 2 weeks is cool. Understand what you are signing up for. Just understand that, okay, this is the game I'm signing up for. So let me understand that there are things that happen that are cool that I don't have to stress myself on. Okay, the same thing on NZDJPY on Friday. I'll keep explaining for you. I think that trade I did not delete it. Okay, I think I deleted it. Now go into the daily time frame. You know, there was a buy I saw before everything started. So the market pulled all the way up. The market rejected for some certain key level, but I don't know. I don't want to go too backwards. So let's go into the H1. So there was just a rejection right there. And after the rejection on the H1 time frame, you can see the same thing that happened. What happened? The market gave a H1 breakout after the rejection around here. Yeah. The market gave us a H1 breakout after the breakout below here. Now we are going to be boxing the QM and the apex. Now just follow the scenario. Scenario one says what? You understand whatever it is. Then you have something like this. Then you mark out something like this. This is your QM. Then you go into the 30 minutes. Is it fresh on the 30 minutes? It was fresh and it's an institutional reference point. How the market used it consistently, and then the market gave it OCM FVG. The high of this is now liquidity. Market pull back into it and then give us a sell. Market tested the zone severally and the market gave us a sell. Now, once the sell happened, market took out the external liquidity, which is very important. Now, when the market came back, market come back all the way up to what? Induce this high again. Now, let's now check the H4 time frame. Let's check the H4. All right, the market did not give a breakout on the H4. Market just took out this external liquidity, pull back all the way up before selling again. So that is why anytime I'm trading, I'm targeting the low hanging fruits. For those people that know me, they know I target the low hanging fruit all the time. Whenever there's a low hanging fruit, that is what I'm targeting because I'm consistent with the closest liquidity. Because Akin Damola once said that is the only target that is certain in the entire chart. Nothing is certain. That's the only thing that is certain, that okay, market is likely going to take out the nearest liquidity. That is all. Any other target is what? Anticipation. The only real target is the nearest liquidity. And it's cool for you to anticipate. It's cool, yeah. So take the trade, even if it's 1:3, 1:4, it's okay. It's okay. It's okay. It's not your market. We're all here to just try and navigate through the market and make one or two amounts of money and then leave. Right? The same thing. So I think Euro USD was the one that was, I think, okay, I saw one on NZDUSD. I'll just keep showing you. But I'm not someone that trade random pairs and I don't like trading random pairs. So yeah, it's quite difficult for me. So go into the daily chart and we'll see. On Friday, on the daily time frame, what we have is before this thing sell, just pay attention. Before this thing sell, we have a shadow reject. So if we go into the 1 hour, we'll see there was a shadow reject here before the sell, and we are targeting the external liquidity. We are targeting the next daily key. So we know we have where the thing started. Then we go into the H1 or the H4. Anyone. Can you see the shadow reject right there? There was what? A shadow reject happened just below here. Look at it. A shadow reject. Now, after the shadow reject, what do we have right here? A breakout. H1 breakout. Now, after the H1 breakout, what do we pay attention to? QM, is it fresh? Apex, is it fresh? And scenarios, we use OCL. So we mark out both. Right? After marking out both, you go into the 30 minutes time frame. Once you go into the 30 minutes time frame, sometimes I say you can what? Investigate. It depends on what you want to do. Sometimes you can investigate. So now this QM for me now, for example, in this type of scenario, I can decide to use the apex. And you guys will be like, why am I using the apex? Now, this QM has an history, it has been used, but Usually, I want to see a proper liquidity being created for me to now use this particular zone. Yeah, there is a low of a week here. Now, if I want to trade from here, you see, it's cool for me to enter from this QM. Quite all right, yes. But then I'll place my stop loss below the low. I'll cover the entire low. Or anytime I want to protect my capital, I can still go to the 15 minutes time frame. Okay. And once I come to the 15 minutes time frame, I want to add something to it. Now, just look at the 15 minutes time frame. Look at this FVG here. And I believe the market will always drop into FVGs. And then I have what? This liquidity above the FVG. Then I'll use this, which is on the word, on the 1 hour time frame. Then I'll prefer using this. So, like I said, it's not all the scenario. Understanding that structure we taught you. Now pay attention to this on the 15 minutes time frame. Is going to play a role even in the basic doctor system, because look at this. A sweep of liquidity happen here, right? A break of structure happen above here. And then the structural liquidity is right here because there's an imbalance right here. Then you can even decide to use this QM, which is very okay. Okay, now I will tell you guys this last thing before I end today's class. Trading. Yeah, I don't know if anybody has told you before. Trading is a game of choice. Nobody does it better than anybody. It's your choice to pick your POI. It's your choice to pick your liquidity. It's your choice to pick your imbalance. Minimize asking questions. Your mentor said, for example, this is an order block. Stop questioning. Lock in and use this as an order block. If it consistently fails, study why it fails and make your own refinement. That questioning is going to make you a forever student. You're going to be a forever student. You keep learning for 5, 6 years and you're still not getting it right. That's because of you ask too much questions. You are too scared. And it's a very bad thing. Trading is a game of choice. Anything you do, it's your fucking choice. Nobody is going to save you. Just know, I taught you this is a sweep of liquidity. This is a break of structure. This is structural liquidity. And we have a previous daily low sweep and a H1. You know that, okay, one of these zones is going to hold. Why the hell are you placing your stop loss midway? Cover the low now. Cover the low. You are protecting your capital. My mentor used to say, the first thing on the chart is not about making money. It's about preserving capital. May your capital no finish. So do something to protect your capital. I don't blame people like Erwin Talent that place their stop loss very big. Yes, you place your stop loss at invalidation point. Then this is where the buy is going to come from based on the basic doctor system. If you switch to the 15 minutes, you see this, and then you place your stop loss, maybe something like this, and then you're targeting the next daily high, like I said, something like this. And it's to 9, it's cool. Even if you enter from here, for example, you go how your stop loss have to cover the low. 1 is to 6, it's cool. It's cool, bro. Okay, it's not even up to 1 is to 6. Let's see. 1 is to 5.9. It's cool. It's not your market. You should understand that we are just teaching you to navigate through 1 or 2 ways. Once the market reaches the target, get out of the chart. And also, finally, don't trade when the market is between 2 key levels. I don't do that. The market, let's say there's a daily key level here. There's another daily key level here. Some of you can do nonsense. The market will come. Tap here, give a break. Tap here, do like this. And you'll be like, which should I do? Me, I don't do anyone. No. If this one will be tapped, sorry, it will not give a break yet. And you'll be like, what should I? Me, I don't go do anything. It's better the trade should go. Next, when I have with the one that is not stuck between 2 key levels, I'm okay to trade it. Right? I'm always okay to trade it. So this is the basic doctor system. Very, very simple. No stress. Rejection, not only just bias. It can be a shadow reject, it can be a candle rejection, it can be CLTs, it can be any type of bias. Once you have that direction, you can use 1 hour breakout, you can use 4 hour breakout, you can use anyone. Now, let me use gold as an example to show you guys a type 2 breakout. I saw a type 2 breakout the other day. Let's go into the H4. And that's why gold has been selling. Let me show you guys. This is a type 2 breakout, right? I think on the daily time frame, there was a rejection right here. I'm coming. There was no rejection, but there was a shadow reject that happened first. Now, once the shadow reject happened, if you come to the 1 hour time frame, after the shadow reject that happened that day, you notice that there's a type 1, type 2, there's a breakout right here. Okay. There was a breakout on the 1 hour time frame that happened, right? Then in this scenario, a lot of you will be waiting for QM or Apex because both of them are fresh. But to me, what happened that day that you guys were shocked was an advanced market structure. What is that? A sweep of liquidity happened here, right? A break of structure happened below here, and the structural liquidity was here. And this is an engulfing sell candle. That's why I took the sell from here. Very simple stuff. The sell came. Candle closed above, but I wasn't too scared though. But the market dropped down and went to my target like this. Simple one is to 5. Right. So I wasn't expecting the market to come here. That is why this high is called a protected high. This high is protected. Not always. Your protected high go market go come out here there. Especially if you are against the market direction. But that's why I took the trade here because the market and this PY is overlapping with the H4 key level. So always very simple stuff. On one that be the other one, I've forgotten the one. It overlapping with the H4 key level. That's why I use two brokers all the time. Okay. Now this is an example of type 2 breakout. This one. Can you see? Market went up and break. There's no type 1 breakout because there's a shadow reject here for us to have a type 1 breakout here. So all this is a temporary sell. That is why the buy came in. There was no permanent bias. The market need to break this H4 here for us to have a permanent direction. That's all. This is a temporary one for you to sell, and you use it to sell, catch small sales.